Welcome back. There is a new entrant in the equity mutual fund space. Trust Group, which already had a debt mutual fund schemes, is now getting into the equity space. Trust Group is run by Utpal Sheth, who's also the CEO of Rare Enterprises, and his wife, Nipa Sheth, who founded the trust and leads the debt capital markets activity. Veteran fund manager Mihir Vora is their CIO, Chief Investment Officer. Prashant caught up with the three of them to discuss more on their new fund. Listen in.
We are entering this space with a very long-term time horizon. We are taking a 20, 30-year plus view. And this is a long-term business, so it's never too late. Secondly, I think it is equally important to have the right team. So after we got our license, we started with the debt mutual funds first, but we were waiting to get the right CIO to start the equity venture. And we started when we got the right CIO. So Mihir is here, and we wanted to ensure that there was not just a capable and competent team, but equally a committed team. And that is what Mihir has built.
What's the USP for investors who may be watching this, for viewers who may be watching this, to evaluate whether to put money into what is, of course, the Flexi Cap fund, the first product? What's the USP, Utpal?
See, rather than just the product, I think what this house brings to the asset management industry is more important. Okay, while we are a small player to begin with, I think we are a differentiated player. We bring an investing DNA to the mutual fund space. We bring a specialization in multiple asset classes, both equities and debt, that this house has been doing for quite some time. And while as a house, we've been under the radar, but we do have more than 20,000 crores of assets under management and advice across our asset management, wealth management, portfolio management, and other businesses and entities within the group. I think that differentiation in our investment philosophy will be evident over time.
A philosophy perspective, could you give us a sort of sense of what we are talking about broadly?
Sure. See, historically, most investing styles are pretty well known. You have value investing, you have growth investing, you have quality investing, you have momentum investing, and so on. The investing philosophy that we are bringing to the table here is what we call as terminal value investing. This is something that we passionately believe in, and it's not well understood or well appreciated.
Terminal value, are you referring to the DCF terminal value, or is this different from that?
It is, terminal value is a very nebulous value in fairly distant future. It's not a static concept, it's a dynamic concept. It's not a mathematical concept, so therefore it is not a DCF value. That DCF formula tries to capture an assessment of that terminal value, but I don't think numbers can capture that. And in my experience of more than 30 years in the financial markets, and with some of the veterans in the financial markets, or other legends in the financial markets, I can tell you that nobody knows that terminal value. But getting the direction right is much more important than knowing the precise number.
Nipa, from a, as you've managed lots and lots of deals over the last over 2 decades on the debt side, what do you hope to bring as promoters of this business on the equity side? I mean, would you want to add to what Utpal said?
No, I think very clearly the idea is to have the best ideology and best principles of investments on that, and I think Mihir is best placed to take that forward. So
Mihir, let me come to you. As I said, you've got a long track record of institutional money management. What do you hope to do at Trust?
So clearly, as Utpal mentioned, what matters in a asset management house is basically 3 things, I would say. One is, who are the promoters, who are the fund managers, and what is the philosophy. So I think what we differentiate is in all these 3 aspects. One is that, as Utpal mentioned the word DNA, and as you rightly mentioned, nobody knows the equity markets as well as Utpal. Nobody knows the fixed income markets as well as Nipa. And I come with 30 years of institutional money management experience, building teams of excellence, consistency of performance, risk control, etc. So I think we have this potent combination of raw market understanding for equities, fixed income, and other asset classes, combined with the institutional experience. And the team that I've put together in the last 5 months is also of a very high quality. So we are not cutting corners in anything. We are building a center of excellence for investments. And the investment philosophy that Utpal mentioned, terminal value investing, is something that as rightly mentioned, as he rightly mentioned, is not very well understood, but it's a very potent tool to identify multi-baggers.
Utpal, you worked with Rakesh Jhunjhunwala for 2 decades plus, right? What do you hope to get from what you've learned from Rakesh Jhunjhunwala? The intangible, so to speak, which you hope to pass on as a mentor, as a guide for the AMC.
I've learned so much from Rakeshji over the years. And he used to always tell me that investing is not an act of intellect. Investing is an act of wisdom, right? I hope to ensure that at Trust Mutual Fund, we build that culture of wisdom rather than just intellect. The second thing I would say is, Rakesh used to tell us that the greatest risk of investing in India is not investing in India. And I want to be very clear that the investors that we are approaching do understand and appreciate that the greatest risk of
is not participating.
Investing in India is not investing in India. Rakeshji also taught me that your patience may be tested, but your conviction will be rewarded. And I think equity markets have their own cycles. There are times when you underperform, there are times when you outperform. But through that, you have to be able to keep your state of mind intact. We want to do the right thing in the right way. We may not be the best performing fund always, and we will hopefully not be the worst performing fund always. But what is important is, through the cycle, how do you behave? What is the consistency? What is the risk-adjusted portfolio calibration that is done? And for that, I believe that we've built a very, very capable and committed team.
Mihir, you're starting with the Flexi Cap scheme. Why a Flexi Cap scheme? Because it gives you the flexibility. And what will the portfolio construct be? Just give us some sense of what do you plan to do with the fund, the first one?
Sure. Flexi Cap, frankly, is a natural choice to start with since it's our first one. It is the largest category. So while incrementally in the last 12 or 18 months, small cap funds have gotten more money, but in terms of absolute size, Flexi Cap still is the largest category, so you can't not be there. That's one. And second is, in my view, there are about 900 stocks to choose from in the market.
Okay.
The consideration set, if I were to, not what we monitor actively, but in the consideration. So obviously the top 250 are large and mid caps, but then there's a long tail of stocks to choose from. So I really want to give myself and the fund manager the flexibility to choose across the spectrum, rather than taking a top-down call as to I want to be in large cap or mid cap or small cap. And second is, the scope for stock selection is so high that it's astounding how much even an index can vary, the index components can vary. For example, last year, in the calendar year, Nifty 100, which is the large cap index, was up by 10%, right? But the top 10 performing stocks in that index were up by 100%. And the bottom 10 performing stocks on an average were down by 25%. So 125% delta in the top and the bottom performers. And across the board, if you see, that's the behavior. So there's ample scope for stock picking across market caps. And that's why we believe that it's better left to the fund manager to decide.
Utpal, talk to us about what your ambitions are on the sort of equity side, on the mutual fund space. I mean, do you have like a target market share in mind? What do you want to get to? Assets under management, what you want to get to within a few years? Just talk to us about that.
Like we talked about terminal value in investing, I think we are very clear that we would like to be a differentiated long-term player in the mutual fund space who's relevant. I mean, at the end of our journey in mutual funds, I would not want trust to be insignificant. I think we have the potential to be a relevant player, and that is the aspiration that we are all working towards.
Okay, that's the word coming in from the new kid on the block, Trust Mutual Fund. It's never too late, to enter the Indian markets and play the equity up cycle. As Rakesh, used to say, Rakesh Jhunjhunwala, that the biggest mistake you'll make, in investing is not investing in India. We'll slip into a break on that note. We'll come back and get you more.